A Mauritius Africa Partnership Conference was held earlier on this week, the first conference of Chief Executive Officers of Investment Promotion Agencies of Africa. Sridhar Nagarajan, Chief Executive of Standard Chartered Bank Mauritius, joins us now for more. Sridhar, thank you so much for your time. Perhaps if you walk us through the objective of the conference as well as the outcome following the convergence of all these significant leaders earlier on this week.
Thank you very much. The objective of the conference is it's more an expansion of the Africa strategy which Mauritius has been rolling out for the past 3 years. So last year the Mauritius government took the initiative that we need to create a meeting place for activating more investments, FDI into Africa. So this particular conference is aimed at in a way saying that we are not happy with just getting 3% of the FDI stock of the global FDI investments for Africa, and we need to come together, work together, understand each other, and bring in much more coherence and partnership in terms of presenting Africa amongst ourselves and to the external world. That's the objective, and also to understand and bringing in 28 countries together for 2 days. It's more like bringing in and creating a networking opportunity.
How is Mauritius hoping to capitalize on its role in being the facilitator of this access across the African continent regarding capital investment?
See, that's because Mauritius already has all the characteristics of an international financial center, which is one of the few entities within the African continent which can actually allow free flow of capital, because the way Mauritius economy has I would say the 5 important things: the location, regulation, legislation, and connection. So that's very important. So that's one thing. I'm saying that because Standard Chartered is present in some of the most vibrant financial centers like Singapore, Hong Kong, DIFC, London, and all these play a very vital role for a very large fragmented market in that particular area. So that's one thing. And by also facilitating physical movement, like last 18 months back, the Mauritius Prime Minister signed off 49 countries in Africa can travel to Mauritius without a visa. So essentially, one is the facilitating soft infrastructure, and the other connecting infrastructure, which is the hard infrastructure which we are talking about. All this makes Mauritius a very convenient place, meeting place for Africa.
We talk to a lot of chief executives of South African major companies here on Power Lunch every day. And if there's one trend that is very apparent, is that they're looking to externalize. Are you benefiting much, given all of those issues that you've discussed now and the appeal of Mauritius? Are you seeing South African companies that in the past perhaps had looked elsewhere coming and knocking on your door?
Yes, actually they are coming for a particularly different purpose. For example, I'll tell you, last year we launched a product called Regional Treasury Center, and eventually South African corporates are the most ambitious in terms of trying to capture the Pan-Africa opportunity, because each one of them are transnational in their own way. So they are really looking at Mauritius from approaching the Pan-Africa market, moving people, running a larger payroll, facilitating movement of goods, capital, everything across many markets for a particular product. It could be a telecom product, it could be a product in services which they are very good at. So that's how I'll present it.
And there are also significant tax advantages as well in being housed in Mauritius rather than somewhere else on the continent.
My view is, as a bank which operates in multiple jurisdictions, my view is tax is the most minimum of the reasons why a company sets its Pan-Africa set up in Africa, for Africa in Mauritius, because the tax treaty which is the maximum used globally is the India one. I think with Africa there are not many tax advantages per se, but it is the advantage of being a connector. That's more important for a corporate, where it can where you can make cluster investments, because when you look at it, the African markets all said and done, except for 4 or 5 of them, are still much small in global scale. So you need to make cluster investment to really get the return on investment, at least for the next 10, 15 years.